Carrot Lane.
A very good morning to you, ladies and gentlemen. We have a fantastic rally that's been building up on the Nifty from about 4 days previously, the fourth day of gains, and a sharp uptick now crossing 23,000. The Nifty itself is up 135 points. Welcome to Top Stocks and Top Funds. I am Shail Bhatnagar, your host, and this is just the right time, ladies and gentlemen, to buy into quality mid caps, buy into quality large caps, put in a lump sum, put in definitely a systematic investment plan, and take benefit of this market, which has now consolidating near 8 months lows, in fact bouncing back. I'll request the PCR to fire the long-term chart of the Nifty Midcap Index, the 100 share index. It has on its own risen about 8% from its most recent low. You see the Nifty Midcap Index today at 149 points higher, 50,956. Till about a fortnight ago, specifically on March 3rd, it was at 46,715. So it's an 8% uptick on the index alone, which was in the beginning of March near its June 2024 lows. So this bottom is being purchased, ladies and gentlemen, whether it's bargain hunting, whether it's quality buying, whether it's deployment of cash, whether it's short covering, whatever it is, it's being purchased. And this is a time when you should again get into quality mid-cap funds if you haven't already made a purchase. Today's option that we present is on Mahindra Manulife Mid-Cap Fund. Remember, this is not an opportunity or an investment advice. This is just an idea that we are discussing with you based on the information that we have. If you do wish to buy Mahindra Manulife Mid-Cap Fund based on the presentation that we have, please do consult an independent mutual fund advisor. Why would mid-caps make sense? While they are volatile, ladies and gentlemen, they are the best creators of supernormal wealth over the longer term. Any dips and quality dips that you can buy into are made for the long term. The mid-cap index has corrected very, very sharply from its most recent high in October, which was to the extent of about 60,600, all the way down to 46,000. That was a correction of about 24-25%. This dip, ladies and gentlemen, needs to be arrested and made to work for your benefit, and no better option than to buy a quality mid-cap fund which has a low PE ratio, a low price to book ratio, and has quality stocks. And Mahindra Manulife Mid-Cap Fund falls into all these points. It has a net asset value of 33.77 for the direct plan. Assets under management are about 3,100 crores, and the return since launch, it was launched in January of 2018. So it has a 7-year price history. The returns since launch for Mahindra Manulife Midcap Fund each year have been a compounded 18.6%, which essentially means that a 7-year SIP of 10,000 rupees, which totaled to about 8.4 lakh rupees over the past 84 months, is now at 19.86 lakhs. Remember, this is a time when the actual mid-cap funds are very down. So at 19.86 lakhs, the CAGR works out to be 24.2% for Mahindra Manulife Mid-Cap Fund. This scheme has 67 stocks. So in a matter of just 1 second, you can buy quality 67 mid-caps at a price point of 33.77 rupees, which is the net asset value for the direct route. This is a wonderful opportunity to get back into the market via a huge lump sum or a systematic investment plan in the same scheme. Now let's look at the price to book value for this particular scheme. It stands at 3.01, which is for a mid-cap space fairly decent. Look at the price to earnings multiple of the entire scheme of 67 stocks. It is an average 22%. It is an average 22.1, which is very reasonable when you look at the kind of overvaluations that are still prevalent in large parts of the mid-cap space. When you look at portfolio aggregates, as I have said, 67 stocks are invested over 3,100 crores, out of which 10% of the AUM is into giant stocks. 34.5% of AUM is into large mid caps, and 52.3% of the AUM is into mid caps. You have the average mid cap of 67 stocks at about 59,670. Now let us look at the most interesting part, which is the portfolio. The portfolio of Mahindra Manulife Mid Cap Fund is very decent. It does not have momentum stocks. It has quality stocks in the form of Max Healthcare, SBI, State Bank of India, Indian Bank, Voltas and Federal Bank. So 3 banks make up the top 5, and amongst the top 5 about 12.8% of 3,100 crore rupees is invested. That brings the AUM in top 5 to about 400 crore rupees. Please notice that this is a phase where private sector banks and public sector banks are in heavy demand. So this is a portfolio in the top 5 which will do extremely well in the coming months. Let's dip a little deeper into Mahindra Manulife Mid Cap Fund. The remaining 5 in the top 10 are ICICI Bank, Bluestar, which is a brown goods major, HDFC Bank and Jindal Steel. Now in the top 10 you have about 5 banks, a sprinkling of public sector and a majority private sector banks. Given the relative undervaluation of the financial services sector versus the broader market, this is a fairly good portfolio. The fund is very conscious of not being extensively overweight or underweight in any sector compared to its peers. So it's almost at par when it comes to the financial services sector. About 19% of the portfolio is deployed. Industrials have 16%, consumer discretionary has 13.7%. Look at the top 2 consumer discretionary companies that this fund has, Voltas and Bluestar. With the early advent of summer in North India and the intense heat that we are expected to see, these stocks are also likely to do well. Now let us come to the most crucial part, returns. How has this fund fared over recent times? The highest NAV for this fund, which is Mahindra Manulife Mid Cap Fund, was 39.51. At the moment it's 33.77. Over the last 7 years, a compounded return has come at 20%. Remember, this is after this very steep correction. If we were calculating a CAGR return at the peak, that would have been even higher. So despite the correction of 26% in the NAV, the CAGR return is still 20% for the last 7 years. It has handsomely beaten its category. It has handsomely beaten its index. For the 5-year, the CAGR is about 33%. For 3 years, the CAGR is about 23% each year. So these, ladies and gentlemen, are quality mid-cap funds which are available to you at a fairly reasonable valuation, and you must take this opportunity while consulting an independent financial advisor on how to utilize this downturn in the market for your own long-term benefit. One thing you can do, put in a SIP, and of course you can also put in an SIP, which is the most critical part of wealth creation. More importantly, you can't have more than 2 mid-cap funds in your overall portfolio, where the allocation for mid-cap funds cannot exceed 30-35% of your overall portfolio. So you keep all these limits in mind and then maybe consult an independent financial advisor on Mahindra Manulife Mid-Cap Fund, available at 33.77 rupees per unit, a quality portfolio of 67 funds, 67 stocks spread over 3,100 crore rupees. Thank you for watching. We'll be coming up with such quality products on our later shows. Please do consult an independent advisor, but pay attention. This is the time when you should add quality to your portfolio, which is available cheaply. Thank you.